Hey everybody, George Moorhead, Bentley Properties, and welcome to another episode of Real Estate Market Trends. We're going to translate this into our conversations that we've been having, buying investment properties, foreclosures, and things like that. So with that, my name is George Moorhead with Bentley Properties, and we've closed over 2,000 residential and commercial transactions. Been practicing for about 27 years, and so we're going to give you some great insights on kind of where we're at today, where we're going to go as far as trending, what do we expect with mortgage interest rates and things like that. And then we're going to translate that into, again, some of the investment properties and things to keep in mind. With that, make sure that you hit the big wow button. Let me know that you can hear me. Make sure that you give me a heart if it's something that you really like. And with that, if you have any questions, post them up in the corner and whatnot. Some of the reports that we go over today, we're going to actually post so that you can download them if you want to. But with that, if you have a specific, zip code, a specific area that you're interested in, since we do a lot of different reports in Pierce, King, and Snohomish County, we can go ahead and fire those off to you. They're very straightforward. There's no marketing. There's no strings attached. So if you're interested, it's a 4-page report, and it goes over it. Plus, you get my beautiful picture. There you go. Anyway, if you're looking for a specific trend, in your specific area, we do track these very seriously. Again, because I also do build homes, as many of you remember, it is important that we track this, and I need to know where we're going, what we're going to do. I have to be projecting out 6 months. And in fact, some of the numbers that you see here, there we go, if I get there, we're going to be going over and why the cheese? Why are we seeing this funny little shift? So let's get on with that. Again, if you like this, share. There was a number of requests for the inspection, or not the inspection, but the investment form, things like that. They texted the number, they got it. Hey, you know what? They're like, hey, this is amazing. There's nothing else but the report. That's exactly it. We'll also post it. Marie will go ahead and post it up on the site. There's 4 different reports that we'll post. It'll be just the general market as a whole, and then we broke it down to today in King, Pierce, Snohomish County. If you're in another county and you would like information, don't worry about that. We can fire that off to you. It's no big deal. Just text 206-496-0545 and put in the zip code that you want to, or the area. And if I reply back asking for your email address, that's so I can send it to you, or I can try and attach it to your text message. They tend to be a little bit bigger, even though they're a PDF file. So if you send us your email address, it just makes it super easy. No, I'm not going to hunt you down or do anything like that, but we will get you that information that you want. All right? Okay. So let's talk about today. Today, people are saying, oh my God, the market is going crazy. Oh, for heaven's sakes. Okay, so let's keep things in perspective. After, and we discussed this, right? So after kind of the kids are getting out of school, we start into the vacations, we get a bump in activity. We get that increase as people are, looking for that home, getting ready, so that they have that new place for the holidays. They have the kids are in school, and they're or they want to be in a certain home for the kids to be in school. Let's qualify that. And then, of course, it's time. It's a great time to buy that home, or a first-time home buyer, which is the dominant market right now, right? Because we already had our first-time home buyers, went up to our move-up buyers, our luxury buyers. We're back down to the first-time buyers, which means that we're heading into a much more flattening market. Some people call it a recession. I don't think we're going to see prices drop. Heck, we haven't even seen prices drop this year, as some folks had said we might. We're still seeing a 3 to 5% appreciation, and depending on where you're at, whether you're in the urban or suburban areas, right? Okay, so with that, total active number of homes. First one, year over year, we're down. Year over year, we're down. Expected. Why? Well, because 2018, with interest rates higher, there was a lot of buyer pullback. Sellers were a little bit more wary. I don't know about this. And then, as we continued in 2019, our inventory started to climb. We started to climb. And then for the first time, we kind of dipped down a little bit, but as expected, right? In fact, when you look at my beautiful chart, there we go. You can, there we go. You can see how we trend, okay? And that's normal. It is a normal cycle. And in fact, if you remember, because statistics or market statistics are always looking in the rearview mirror. So this technically, even though it's August, year over year, technically it's July, right? If we figure a 30-day close, we're talking, end of June, July closings that impacted in August. All right. So does that mean September is going to bump back up? We should show pretty good numbers for September. But when it comes to October, we're going to say, oh my gosh, looks like the numbers are falling off again. Oh, okay, because again, we're looking in the rearview mirror. Always remember that so that when you're making your plans and whatnot, we're adjusting accordingly. But last month, we're only down 5%. Okay, well, that's really good. But that also means that we're also seeing, again, that balanced market. When we talk about a median price, now let's qualify what a median price is. Sometimes the median doesn't quite get it right. So let's talk about median price. Median price is for the month that it closed. And let's take August, since that's what we're talking about. We'll take the month of August. In the month of August, the median price of all of the homes that closed, not what the value of your home is, but the value of the homes that physically closed a transaction where a buyer and a seller said yes and closed, and now we have a new homeowner, okay? When we take that median price, it was only down 4.3%, and that was over the last month. Okay, well, that's pretty good because normally we're starting to see that trend start to shift, okay? Meaning we start to head downward before we start peaking back up again to August, November, kind of mid-December. And then, of course, it falls off again for the January, February type months. So we see this and then it comes back down again, right? Okay. Now, with that, pending sales actually went up last month. Okay, well, that's great. Now, that's a true metric because that is a active contract versus a sold contract, right? Year over year, we were up 18%. Yes, we started to see in well-priced homes in desirable areas, we did see multiple offers. And that is absolutely expected. Do we anticipate seeing that trend carry through? Nah, it's going to wane a little bit. Kids are getting, got back in school. We have last-minute vacations. Buying a home's not top priority. So it's going to drop down a little bit. And then, again, October, November, mid-December, we're going to bump back up again. As far as, well, let's pop over here. So when we talk about total active for King County, we were actually at, up 9.2. We're at 9.5 for Snohomish and 22.3 for King County. Okay, so these numbers dropped and those numbers actually went up. Okay, this is the MLS as a whole. So the entire MLS, right? Multiple listing service, the Northwest Multiple Listing Service, all the way basically from the Canadian border down, way down south, different areas, Chilean, all the way, most of Western Washington, all right? Okay, when we talk about pending sales that were up, King County was actually down 5%, but was up 21.2% year over year, all right? So year over year, the number of pending sales went up, but from July, they actually came down just a tad bit, okay? Now, King County is the largest or one of the largest counties, right? Especially is when we consider population. Snohomish County was up as far as pending sales, 7.7 month over month, and then 30.1% year over year. That's a pretty big increase. And again, because there's a lot of new construction, because of affordability and whatnot in Snohomish County, there's a greater population that is looking in those areas. Same thing with Pierce County. Pierce County was up 7.1 from last month and then 16.6 year over year. Okay, well, again, Pierce County is probably one of the most desirable. In fact, what's really interesting is that Pierce County is now starting to experience what King County went through about 3 years ago when they started to see a dwindling type of buyer homes available to a buyer because builders are starting to pull back. They're starting to see a trend. And, now we're starting to see at least a few more sales starting to happen because it is a very positive way. One of those things, the light rail coming into play, a lot of people are banking on that. which I think is going to come to fruition. Investors looking at, homes that are going to be on that light rail type of corridor, the trolley corridors and things like this, is going to have an impact. Why? Because people less and less want to drive. Like me, they don't want to sit on 405 or I-5 sitting in traffic forever, okay? And so they're going to be looking at alternative methods of getting to work. So those close-in areas are going to be of desire. That's also why when you take a look at the Growth Management Act, dictated by Washington State, delivered down to the counties and then down to the cities, you're going to start to see, well, not start to see, you have seen that they've been mitigating urban sprawl. So they've been trying to condense everything into the cities, and a lot of people are complaining, oh my gosh, it's so hard to get to the city now. It's just horrible, okay? Well, then they open it up a little bit. In 2020, some of these areas are going to open up. They do a typical 5-year review. Sometimes they'll open it up in 2020, it goes into effect in 2021. Those are things you want to keep in mind as we continue not only the growth and as the light rail comes online, as an investment as to what you want to do, both in looking at buying a rental property, whether you're looking at flipping or looking at multifamily, okay? Just remember, buying multifamily or commercial is like a business, okay? It's not like residential where you say, I got this comparable house, I got this comparable house, and this comparable house, and I compare these, and here's approximately my value. No, it's based on profit and loss of a building and like a business, right? And what's the condition of the building? What capital improvements do we need to make? Things like this come into an adjustment on multifamily and commercial. So slightly different picture because it's based on performance, okay? Right, that's the simple side of things. All right, when we talk about months of inventory, we have 1.8 months of inventory. Now, that's MLS wide. It's 1.7 in King, 1.6 in Snohomish, and 1.4 in Pierce County. Now, you might say, okay, George, what does that really mean? How does that translate into, you've mentioned absorption rate. Okay, let's, I don't want to say oversimplify it, but I'm going to try and give you a metaphor that I think is going to be easy to understand. So if I had in my hand a sponge, and this sponge was dry, okay, and I started to add water to it. Now, a dry sponge is going to absorb a lot of water, meaning that in the market, if we're able to absorb that, that water and it continues to fill up that sponge and not spill over, right? That means that we have a higher absorption rate, meaning that we can have more listings because we have more buyers and sellers coming into agreement. Now, once we get to a certain point, right, we hit that sponge, and if you hit, go to your sink, grab a sponge, squeeze the dickens out of it, and put it down, and start just adding a little bit of water. Okay, you'll understand what I'm talking about. But then that sponge gets to a point where it gets a little spillover, right? It starts spilling over. It can't hold as much. Okay, well that means that we have kind of hit the absorption of that. So when we are in the market we're in right now, that sponge is still absorbing. Okay, it's still taking in because we only have, in this circumstance, we've got 1.8 months of inventory, or in King County, 1.7, 1.6, right? In a healthy market, we used to say a healthy market was 4 to 6 months of inventory. Okay, well, it hasn't been that way for almost 4 years now. So if that's the case, is our new trend really kind of the 2 months? And is that what we're going to start looking for? At what point do we start changing that trend? And that's going to be something we'll talk about at a different time. So as that sponge continues to absorb, that's great. But like in 2008 and 9 and 10 and 2011 up to 2012, that water was pouring over. And in fact, we had like 8 months, 7 months. I think we peaked out, at 9 months of inventory in certain areas, and which means that there was way too much water for that sponge to ever hold, and it was just pouring out. And of course, prices came down, as we all know, right? But because prices are holding, because we're still able to hold that water in that sponge, we're still seeing that trend. Even though up until this last month, we've seen a downward trend as far as buying, but yet inventory was going up. So we're adding water to it, but we're not getting enough evaporation, if you want to call it, of the buyers pulling that water out. We weren't getting as much. Last month, we saw a much better bit of activity. We're pulling out more water than than listings were going in, which was good, right? Okay, now hopefully that made sense with the little sponge story. Call me SpongeBob, I guess, or Sponge George. Anyway, days on market. That's a true indicator of when we start talking about buyer activity versus seller perception. And this is what's really, really important, because what this shows is that the seller perception of where they feel the market is versus the buyer perception of where they think the value of a home is, we're seeing a greater and greater disparity. So even though, we're up, basically we're at 33 days. I think last month we were at 30 days. There we go, 30 days from last month. Last year we were at 28 days. So homes are staying on the market a little bit longer. Now, when we are working with a home evaluation, I kind of call the active listing or the active price what we call the wish list. All right, that's my wish. I would love to get this price. All right, but it really means that, does a buyer at an arm's length transaction agree with you? Well, in this circumstance, what we're seeing is that is becoming less and less the case. In other words, buyers are a lot more conscientious about price, again, because there's so much more information out there that they're starting to pull back. And that is, again, why we're also starting to see the average medium price, or well, not the average price and medium price are two different things here. I'm only going with the medium price. So we're seeing our median price is coming down just a little bit instead of going up. All right, that's totally common, and it's consistent with what we're seeing in this metric over here. All right, so the nut is we still don't have a whole lot of inventory out there for the current buyers that are there and for what the sellers want to sell at. All right. When you take a look at an investment property, and so we were talking about some of the foreclosures, and anybody who attended the tax foreclosures and whatnot paid their $2,500 deposit, went online and bid against some of those properties. Some of those folks are happy and some are not so happy because they didn't do their homework. And some of them, I scratched my head like, why did you buy that? Anyway, with that, understand that those investments are going to be, because that pool, that actual number of homes that are worthwhile picking up have dwindled even a little bit more. So again, 2020, as we hit a more flattening market, it's going to be a market that you're going to look at favorably. Sellers, you're going to be waning a little bit. I'm sorry. As we head into Q4, October, November, December, fourth quarter, we're going to wane a little bit as far as values go, and that's okay because that is totally normal. So if you're getting ready to put your home on the market, don't panic. That is perfectly normal. For buyers, that's going to be a really good time for you to take a look at a house because you're going to have less competition and sellers are going to be a little bit more motivated. All right. As we head into Q1 and through Q4 of 2020, it is going to, I think, remain flatter. Okay. I'm not saying that we're going to go down. The numbers, some of these numbers might go down as far as total units available might go up, but actual pending sales and solds will probably go down. But that doesn't necessarily reflect that the intrinsic value of your home is going to go down. I just think you're not going to see as much of an increase. All right. So for the sellers who currently own, again, sky's not falling. It's not Armageddon. Don't worry. Because we really feel that it's going to be short term. I think 2021 is going to be a recovery, and we will start to see the first-time home buyers come back in aggressively, take over again an aggressive market share, and then shift into the move-up buyer in luxury homes, which tells us we're going to be in full recovery. And I think we'll see that in Q3 of 2021-ish, maybe even by Q2. But I think our flattening market for 2020 is going to be very limited. Okay, so we've gone over where this is. We've talked a little bit about how to get some more information. Again, there's no strings attached. Just go ahead and send that off. If you want the link for the vetted contractors, just text the number, okay? This is not a phone number that people really answer. It's a response to you so that without talking to an agent, you can go ahead and get information for free. Most of it we'll post on the site, or you can email us and request it. If you want it mailed to you, hey, just give me your mailing address. We'll fire it off to you. No big deal. Make sure you look at it, especially if you're doing it on your phone. We did receive a couple of requests. and they kind of got their address wrong. And so, of course, it came back, but I had no way of telling you. So if you requested the inspection, the investor inspection report, and you asked it to be mailed to you and you did not get it, check the mailing address that you sent me, because it's probably wrong, because otherwise I have no way of sending it to you because I didn't get a first name, right? Okay, so with that, again, if you have any questions, ping me. You can text me. You can post them up in the corner. We'll give you any feedback that you want as far as zip code, or even dialing it down to a community. Let's say you live in Lake Hills or Phantom Lake or Lake Taps, or Twin Lakes, in Federal Way. If you're looking for that specific area, just let me know. We'll fire off the report, because we do keep them in those different pocket areas that we track and we trend. Absolute benefit of having a team. So, which I just want to shout out just real quick. Thanks everybody on my team. Jen has it right. We have an absolutely rocking team. We do have a lot of fun. And if you have any questions, any one of us will reach out to you. In the meantime, you guys have a beautiful day. Let me know what you guys think. Give me some feedback, ask questions, and I will chat with you guys later. Take care.